Hey guys, how's it going? It's Andy from Magoo Investing. Happy Friday. I can't believe that it's May 1st. In my video on Wednesday, I talked about 4 stocks that I was getting ready to buy for May of 2020. It was actually 5 stocks if you include Starbucks, which I made a separate video about, but if you missed Wednesday's video about the 4 stocks I'm looking to buy, I'll link that above right now. I've decided I wanted to make this type of video for pretty much every sector you can think of because I kind of have a habit of picking a lot of the same stocks over and over again. So if there's a sector that you'd like me to go over and pick my 4 or 5 favorite stocks from, I'd really appreciate it if you leave those recommendations in the comment section down below. It will be a great way for me to talk about some of your favorite stocks, and it will kind of expand my knowledge on the different stocks that I've talked about. I have a pretty good knowledge on a lot of them, but there's so many stocks out there. There's 2,800 different stocks you can pick from, so there's plenty out there that I haven't talked about yet. So leave them in the comment section down below, and I'll get to them as soon as I can. So in this video, I wanted to talk about the top stocks I'm willing to buy for May of 2020, looking at the social media sector. This is one of my favorite sectors, and I feel like it doesn't get a lot of love. When you look at these companies that get a lot of attention, you think of the big boys of Amazon, Microsoft, Apple, stuff like that. But I think that the social media sector kind of gets overlooked, and I think there are some fantastic options in there. So in today's video, I'm going to be talking about the 4 social media stocks I'm looking to buy in May of 2020. Before jumping in, I am not a financial advisor. This is not financial advice, and you should do your own research before taking any positions in the stock market. Also, if you're new here, I'd really appreciate if you hit that subscribe button, as it would help my channel out a lot. The first stock I wanted to talk about is the big one in this sector, and that's Facebook, ticker symbol FB. The reason I wanted to talk about Facebook is because some of the stuff that we learned from their earnings report on Wednesday gives us a better view of kind of the overall social media market. Currently, the Facebook share price is sitting around $205, and year to date, it's pretty flat. When you look at the recent history of the stock, just a couple days ago, it was down around $185, and it has pushed up recently as a result of beating expectations for their earnings report on Wednesday. So let's talk about what happened to Facebook stock that pushed it from $185 up to $205 within a couple days. Obviously, I feel like everyone knows that Facebook is the giant when it comes to the social media sector. They are the largest social media stock on the planet, and when they released earnings, pretty much everyone was watching to see what was going to happen. At the beginning of this week, I talked about some major things we were looking for going into this week. And after all of the momentum that we've seen in the stock market, I was making sure that some of the big companies, the blue chips that were announcing earlier this week, if they were posting positive earnings, I was going to be very bullish on the stock market. At the beginning of this week, we saw Microsoft post solid earnings, and they talked about how they have a lot of optimism going forward. And that allowed me to kind of flip the switch and be bullish. And so that, in addition to Facebook announcing earnings on Wednesday, there's a lot to like about tech and specifically social media. Looking at the stuff they posted, they had some absolutely ridiculous numbers. They have almost 3 billion users when it comes to Instagram, Facebook, and WhatsApp. So they have so many people using their platforms. Even if you just look at Facebook, which is sitting at around 2.6 billion users, that's ridiculous to think about. That's 33% of the world population is using Facebook, and they continue to add numbers to that. And every time I see these numbers, I stop and think, I'm like, where are they finding these people? I feel like pretty much everyone that would have signed up for Facebook would have done so already, but somehow they keep expanding their user base. So now let's talk about some of the things that were really attractive from this earnings report. Back in March, the company came out and said they were worried about a potential drop in revenue from ads as a result of a slowing economy. Pretty much anytime you've seen a recession or just a slowing of the world economy, ad revenue has kind of followed along with it. So as the virus was going around, they were kind of warning about some potential drops in the revenue. This news kind of spooked investors at the beginning of the March, and in addition to the overall market falling, Facebook dropped a lot in its share price. But then with earnings yesterday, the company came out and said they're very impressed with the recovery that they saw in the ad revenue for the month of April. And that kind of mirrors the sentiment that was given by companies like Google. So it shows that there's still money being put into advertisements. So that's kind of a reason why the stock pushed up so fast after the earnings report came in, was that changing of wording, how they were worried in March. And then by the time the earnings came out in April, they're starting to feel a lot better about the revenue sources. Some of the really cool numbers that they released with their report has to do with 800 million daily active users when it came to their live streaming sources on stuff like Instagram and Facebook. That is just so many people. The rest of the companies that we're going to talk about in this video have between 200 and 300 million daily active users. And the fact that 800 million people are using the live feature is just ridiculous to think about. Also, something really attractive that I've made a point about talking about this week is the fact that I want companies to have cash reserves as this virus continues to go on. I want that overall stability, and Facebook is very stable, having over $60 billion in cash just sitting around. While I don't think this is going to really impact Facebook like a lot of the other physical retailers, I'm excited to see what they do with this $60 billion. They have been very active in expanding their investment portfolio. Just this month, they announced a deal where they're going to invest $6 billion into the Indian company, I'm really going to butcher this, Jio, J-I-O. And based off the fact that India is one of the largest markets for Facebook out there, I think this is a fantastic idea to expand their reach to a region that they might not have been able to take full advantage of yet. Looking at their ARPU, which is average revenue per user, it's sitting around $7. It's a little bit less than what we've seen in the past 2 quarters, but when you look year over year, we still see an increase, so I still feel pretty good about that. Overall, I've been pretty critical about Facebook in the past, but at this point, I kind of just need to eat my words. As I've talked about, I thought that there was no way that they can continue to expand, and I've been proved wrong time and time again. And they can use that $60 billion that they have sitting around to protect themselves during this virus, or expand with stuff like the investment deals that they've made already. Also, the fact that they have a user base of $3 billion and their revenue has not really dropped like they were worried about at the beginning of March has me feeling very good about the company, and is why I have it on my buy list for the top stocks to buy for May of 2020. Let me know how you feel about Facebook stock in the comment section down below. Next up, I want to talk about Twitter, ticker symbol TWTR. Twitter has been part of my investment portfolio since around early November, and one of the main reasons why I took that position is because of the wild ride that it had right before that. Back when they released earnings in October of last year, they had a bug with their ad system, meaning that they dropped a lot in the overall ad revenue that they were expecting, and the stock crashed. And so I took advantage of that and bought in right there. And it had a nice stable end of 2019 going into 2020. They beat earnings report at the beginning of this year, the stock skyrocketed, and it has fallen. And they announced earnings yesterday, and the stock was down between 7 and 8% throughout the day, so they missed a lot on expectations. So we're going to talk about what happened there and why I still think it's a buy for me. So right now, the Twitter price is sitting around $29, and you look recently, the stock has been up and down a lot this week. On Wednesday and Thursday, things looked pretty good. It reacted really well to the Facebook and Google news, as those giants came out and talked about how the ad revenue was not dropping as much as they were potentially worried about. So the stock jumped because of that. And it originally jumped at the beginning of the earnings report when they beat expectations on revenue and earnings, and things looked really good. But then they started talking more, and being from around 10% up, the stock ended up cratering as a result of the company talking about the recovery in their ad revenue did not go as well as they initially thought. So this is where you start seeing the difference between these social media companies. You have Google, which is definitely not a social media company, but they have a big impact. Google and Facebook came out and saw a nice increase in revenue during the month of April, and Twitter did not see that. And so Twitter, as a result, fell a lot as a result of those earnings, even though they beat expectations on pretty much everything else. So now I need to talk about why I think it's still a buy. It just missed out on 7%, the incredible week that it had as a result of not having fantastic ad revenue. So let's talk about the positive things I saw from that earnings report. My favorite thing I saw was a 27% increase in revenue year over year. That is incredible for a company that's been around for a long time. And so that jump in revenue makes me feel very good about the future prospects of the company. Then you saw a 24% increase in the MDAU, which is monetized daily average users, which is the largest yearly jump in the history of the company. So putting that together with the increase in revenue year over year and the increase in the monetizable daily average users, those are the main reasons why I feel really good about the platform. In addition to the fact that I love the service, this is something that I use almost every day. And if you'd like to follow me there, I'm at Magoo Investing again. So as you can expect, this company is not going to be as stable as something like Facebook. They beat their expectations on earnings, but did not give a fantastic outlook on the future with some potential drops in ad revenue. But then when you look at the past year for year over year data, they have more than 20% increases in their revenue year over year and their monetized daily average users. And those were the two main things that make it so that Twitter is going to be a constant part of my portfolio and why I'm looking to add to my position during the month of May. Let me know what you think about Twitter stock in the comment section down below. Next up, I want to talk about Snapchat, ticker symbol SNAP. Snap has been part of my portfolio since around the new year, and it's probably been one of the most volatile stocks that I've owned. As a result, it's one of the smaller portions. I think it's around 10 to 15%, but it has been probably the best performing stock. Looking at the stock price, it's sitting around $17.50 right now, and it's up 7% year to date, which is outperforming things like Facebook and Twitter, which I thought was very impressive. Going back to the volatility, you were really able to see that when they blew the expectations out of the water for their earnings report this past week. After that earnings report, the stock was up 35% during the day, which is an incredible jump that you were very unlikely to see with some of these well-established companies like Facebook or Twitter. Some of the numbers that they reported, there was an expected loss of around 20 cents per share, and they came in with a loss of 8 cents per share, which is a fantastic beat. Also, they had a 44% year-over-year increase in revenue, which Similar to what we saw with Twitter, is one of the main reasons why I'm bullish on these companies. And they saw a 20% increase in their daily average users to 230 million. Obviously, this is nowhere near the 2.8 billion that Facebook has, but looking at their growth over the past couple years, I think 20% is fantastic. This is a company that does very well at capturing the younger generation. I saw a statistic that on average there are 4 billion snaps, so the messages sent between people per day. 4 billion. That's just so much data going back and forth, and it is a crucial part of people's lives during this quarantine process. That's why I've been very bullish since the lockdown started, and I will continue to be bullish overall. There are some things I'm watching out for the company though. One of the main negatives I see about the company is that their overall reliance on ad revenue, which is something you're going to see a lot in this social media space. But currently 98% of their revenue comes from advertisement. And as we've talked in the past, as things start to get worse, ad spending usually goes down with it. So if this continues to go on for longer than expected, we are expecting to see a potential drop in ad revenue for Snapchat. So that's going to be something I'm going to be watching in the future. Snapchat is a wonderful part of my position. It is very volatile, but it makes up only a small portion of my overall portfolio. It's a company I use on a regular basis, and I think it will continue to expand over the years. It's definitely not going to get to the size of something like Facebook, but I think for the niche that it holds right now, I think it does exactly what people want it to do. Let me know what you think about Snap stock in the comment section down below. And then finally, I wanted to talk about a social media company that's been pretty under the radar. I didn't actually hear about this stock until about a week ago. I'm going to be talking about Weibo. I might have butchered that name, but it's ticker symbol WB, and I'm going to continue to reference it as WB stock for the rest of this video. This is a Chinese social media company based out of Beijing. It's down around 20% year to date, and it's currently sitting around $37. And when you look at the 52-week high of $70, you're seeing a pretty nice discount for a company that seems very popular in that region. On this channel, I've talked a decent amount about Chinese companies, stuff like JD, Alibaba, Luckin Coffee, Baidu, I think those are the main ones, but I haven't talked about WB yet. From everything I can see, WB, the translation of the name, actually goes to microblogs, so it fills a similar niche to Twitter in China. However, you're not going to see a lot of the politically charged comments that you see on Twitter in China because of the censorship, so it seems like it's a lot more focused on entertainment and a lot less on political discussions. When you see a market cap of $8 billion, which is 1/3 of what you see with something like Twitter, you might be wondering why I think it could be an attractive buy for the future. And one of the main things is their way of increasing their revenue over time. They went from $650 million in revenue in 2016 to over $1.5 billion at the end of 2019. So those are some incredible increases in their revenue. Looking at the stock chart, there are some red flags that I am seeing, and it's definitely the run up in 2014 and 2015, the push up to over $130, and the bubble bursting after that. And that's something you've seen with a lot of Chinese companies that have been expanding very quickly. But it looks like it's starting to build a support between $35 and $40, and it seems like it's found a nice hold there. Whenever I talk about Chinese companies, I do need to address the risk associated with them. We've recently had news events about Luckin Coffee, ticker symbol LK, where they had some false sales, a lot of them actually, over $300 million worth of it. It just shows some of the risks associated with buying Chinese companies that are owned and operated from China. When you look at stuff like Starbucks, the reason I loved it was the exposure that it had to the Chinese market, but it's based in the United States. Anytime you buy a Chinese company, you have the risks associated with the Chinese regulatory system compared to the SEC that we see in the United States. For a while, I've been looking to expand my portfolio into the Asian markets, and ticker symbol WB could be a potential option for that. This is definitely not going to be a major part of my portfolio because of the risks associated with it, but I love the increase in revenue that we've seen over time. It seems like it's a decently run company. You had the bubble bursting, but it looks like it has a decent support from where it is right now. I think it's important to have exposure to Asian markets, and in my opinion, I think WB could be a decent part to your portfolio. But I don't want it to be a huge part of my portfolio, and that's why I like the fact that it's relatively cheap at around $37 compared to stuff like Alibaba. So let me know what you thought about ticker symbol WB in the comment section down below. Thanks for watching. These are my 4 stocks I'm looking to buy in May of 2020, specifically in the social media sector. Obviously, I had to talk about stuff like Facebook, but I already own shares of Snapchat and Twitter, and the more I see about the company, the more I fall in love with it. Let me know what you thought about these 4 companies, my breakdown if I missed something very important about them. Thanks for watching this video. Stay inside, and I'll see you in the next episode.